All right, accounting kids. We are going to move on to lesson 2, which is analyzing transactions into debit and credit parts. All right, so chapter 1 takeaways basically is the accounting equation assets equals liabilities plus owner's equity. It's always said like that. It always has to be in balance. And again, what you do to one side, you have to do to the other. And if two accounts are on the same side, one goes up and one goes down. All right. So those were kind of the basics that we learned from chapter 1. Now what we're going to do is we're going to do some stuff with chapter 2, and we're going to introduce a few more accounting terms. And so we're going to use what are called T accounts to try to help you see how transactions affect accounts versus just the way we wrote it out with some plus and minuses in chapter 1. A T account is basically just a device that's used to analyze transactions. All right, so that you can see right here, this is a T. This is how they get the T. It goes across, and then it comes down here, and you'll notice up here is the accounting equation. So again, everything in accounting is based on the accounting equation. So they've made a T, and they're saying pretty basic stuff. Assets are on the left side, so this is called the left side. Liabilities are on the right side, as well as owner's equity. This is the right side, okay? So the left side of the accounting equation, the right side of the accounting equation, all right? And we have this T. Okay, so a couple things about this now. We're going from right side and left side. We're going to throw in what we're going to call in the accounting world the left side and the right side. So these are two terms that you're going to need to get familiar with, because I'm not going to say left side, right side. I'm going to say debit and credit. And these are just accounting rules. Whoever came up with the accounting equation and the right side and the left side, they said, we're going to call the left side of the accounting, or the left side of a T account, we're going to call that the debit side. And we're going to call the right side the credit side. Okay? So this T account is going to be one of our accounts. So it could be cash, supplies, whatever. And we're always going to set it up like this. Okay? So left side debit, right side credit. That's just a rule. You need to start becoming comfortable with debit and credit. All right, so what does that mean? All right, so here's what we're going to do. We have assets equals liabilities plus owner's equity. All right, we know that assets are things that we own. And we have accounts that got introduced in chapter 1. So like assets right now are our cash account. We own that. Accounts receivable, that's cash that people owe us. And then we talked about supplies and prepaid insurance. Those are our assets. Okay, so all assets are gonna, if you made it into a T account, all right, assets are on the left-hand side of the accounting equation. So they are going to have a debit, or what they are going to be called is a normal balance. And then you have the right side, which is credit. Okay, let's look over here. Liabilities and owner's equity are actually on this big T account on the right-hand side of the accounting equation. So what the rule is, liabilities, which is money that we owe, if you make a T account for all of our accounts payables, their credit or normal balance side is going to be on the right side, because the rule says the right side is a credit. And then you just put debit. Debits are always left, credits are always right. Owner's equity, it's on the right-hand side of the accounting equation. So if you were to have T accounts for your owner's equity, which is your capital account, the normal balance side is considered the right side or the credit side, because it is on the right-hand side of the accounting equation. But you're always going to do debit on the left, credit on the right. Okay, So what's that mean? Okay, so now we're going to start getting into transactions. So think about a transaction. If we have to figure out, rather than just using plus and minus signs, we need to figure out in the accounting world where a number is, and when I say a debit or a credit, you're going to know, does that mean it's increasing an account or decreasing an account? So again, all assets have a normal balance on the debit side, which is the left-hand side, and if you want to increase an asset, so if you want to increase cash, if you want to increase supplies, you are going to call that a debit. It's going to be increased with a debit, and then on the opposite side would be a decrease. All right, so increase on the normal balance side, which is a debit because debits are on the left-hand side and assets are on the left-hand side of the accounting equation. So just the opposite, liabilities, money that we owe, our accounts payable. We're going to increase our account payable accounts with a credit because it's on the right-hand side of the accounting equation. So that's what's going to be considered its normal balance side, and the normal balance side is always the increased side. And then the same with owner's equity, which would be your capital account. If we want to increase capital, it's going to be with a credit. Okay. This slide show and the next one, I'm actually probably going to share the actual slideshow with you. So if you want to print anything off and have these as study aids and have them right out there to help you know what's increased and what's decreased, that's probably would be a good thing for you guys. So I'll probably share this with you so you can do that. All right, so those T account, debit, credit, normal balance. All right, that's basically what we're going to be talking about here for Chapter 2-1. So we've got a little assignment. So I'm looking on page 31, and I'm doing the work together, and the work together says, determine the normal balance and increase and decrease sides for the accounts. All right, so what I did here is I made an Excel spreadsheet and I made some T accounts. So what they want you to do is they list 7 accounts. They want you to, and you guys are going to do this a couple of these assignments, so you can use this as a sample. You're going to list the account, which is cash, and I'm going to center that just to make it look good. All right, so they want to know, and I'm just going to go ahead and do this really quick. So I'm going to do accounts receivable, and C. Kelly, and I'm going to type in supplies and insurance. And let's see, accounts payable. That's going to be and then we have another accounts payable, and that's going to be and then our last one is going to be Jeff Dixon Cap. All right. I would center those, but just to save time, I'm not going to. So I listed, so they give you the accounts. I made a T account for each account. Now what we're going to do basically is what this chapter just did. The first instruction says to prepare a T account. Did that. Label the debit and credit sides. Okay. Well, this is going to be the same. The debit side is always the left side, and credit's always the right. So this doesn't matter what the account is. This is just a accounting rule right here. Doesn't matter what the account is, but we're talking left and right, and left is debit and right is credit. And that's just the same, all of these. So it's going to be debit, credit, debit, credit. You got to hit enter, and then debit. Okay, so this is pretty simple. Left debit, right credit. So all your T accounts are going to be like that. Okay. Now, the next instruction said to label each side of the T account using the following labels. We need to put in the normal balance and then what's increase and decrease. All right, so this is where you guys are going to have to start understanding which accounts are assets, liabilities, and owner's equity. So things that we own are assets. Okay, so I know we own cash. So cash is an asset, and it's on the left-hand side of the accounting equation. So this is going to be the normal balance side for cash. All right, accounts receivable. This is money people owe us. Again, this is an asset. So assets are on the left-hand side of the accounting equation. And since this is an asset, that's going to be and that's the debit side. So this is going to be a normal balance. Supplies, another asset. We own supplies. So I'm going to put that on the debit side. Prepaid insurance. Again, we own insurance. We buy this insurance, so we own the protection. So again, these are all assets. And they all are on the left-hand side of the accounting equation because assets equals owners or liabilities plus owner's equity. All right. So now accounts payable. Accounts payable is a liability, and they're on the right-hand side of the accounting equation. So their normal balance is going to be on that right-hand side, which is the credit side. And both of these are accounts payables, so they're going to be the same. And actually capital is going to be the same because owner's equity is also on the right-hand side. All right, so that's going to be normal balance. All right, so I'm gonna do this really quick, and then we know now. Here's the rule. This is how you increase, and you always decrease on the opposite. So whatever is the normal balance, increase, and then decrease on the other side. So these are how our accounts are going to be going up and down. All right, so that's all we're doing right here for this one. So this is just, okay. So notice these are all assets. Okay, these are all assets because these are things that we own. So we increase on the normal balance side and decrease on the opposite. So assets are increased with a debit, decreased with credits. Now let's go down here. The normal balance side is on the right-hand side for accounts payables. So this is going to be our increased side. And the debit side is going to be the decreased side. Same with this one. Normal balance side is the increased side. And now we go down to owner's equity, same thing. It's on the right-hand side of the accounting equation, so that's a credit, that's its normal balance, so this is going to be increase, and this is going to be decrease. All right. So that is a quick overview of 2-1. We'll be doing some more with T accounts as we continue through Chapter 2, but this will get you started for 2-1.